right, well, welcome to the February Economic Update at Beyond Wealth Advisors. I'm John Cleaver, partner and senior financial advisor, and
Dennis Bacon, Chief Investment Officer at Beyond Wealth Advisors.
this is our February update. Welcome from Kansas City, home of the recently crowned champ Kansas City Chiefs.
Yep.
So very excited. Wanted to bring you and start off with some good news today.
I know baseball season's starting.
Oh, no.
Wrong one.
Wrong news. So, but maybe some good news. The market's actually been trending a little bit more positive. Is this good news, and is the bad news behind us?
Well, it's a good question. The jobs report last week was better than what they expected.
Right.
And the unemployment's dropped about 3.4%, which by all accounts is ultra low. Inflation's still high, but seems to be mitigating some.
Right.
Interestingly, China, actually their manufacturing index, while we may not think we care a lot about it, we'll follow up with that later,
Right.
but theirs has actually moved into positive territory. And the markets are all remaining higher, but
Right.
they are remaining volatile.
Right, yeah. So you mentioned a lot in there. Most of it sounded like good news. Does that good news continue as we move forward into the year?
Well, we always get in this conundrum.
Yeah.
And I don't want to sound like a pouting pundit of pessimism, but
Say that 3 times
pouting
fast.
pundit of pessimism, I can say it
Okay.
again. But manufacturing data remains in contraction mode. Matter of fact, the new orders for January were at 42.5, and anything below 50 is not good. So that's a really low level for manufacturing orders. Core retail sales were negative relative to prior year for the third out of the last 4 months. That's not
Right.
real good. Housing indicators all still continue to point negative. All the housing industry is not looking good. And consumer confidence, while still in the positive territory, continues to be at lower levels each month after month. So
Right.
that's not really pointing in the right direction.
Right.
So thus, we're still looking at
Yeah.
risk down the road.
Right. And that's leading to some of the volatility that
Right.
we're seeing right now. We're also obviously still in the middle of interest rate corrections, I guess, interest rate
Rate
hikes,
increases, yeah.
increases. We just had a 0.25% increase recently, that we've been going through this for the last 6 months. Certainly potential for additional increases over the next 6 months. So we understand that it takes time. Like, I think sometimes people think, oh, we had an interest rate increase, there's an immediate impact that comes. But it takes time. Sometimes it may be 6 months before we see the real impact of that. So, couple thoughts here. One, do we think the Federal Reserve could actually overshoot that and actually stall out the economy? And number two, what do you see in the interest rate world going forward?
Well, we used to say that's the $1 million question. We'll say that's the $1 trillion
Trillion
question
dollar
now.
question, okay.
But I think often with the Fed, they tend, because this long lag time of the impact of being typically considered 6 months, in my view, the impatience of the Fed and their late to the party plus impatience typically drives them to overshooting. Right now they're trying to create a soft landing in the economy. I think most people feel the chances of them creating a soft landing are not real good. The broad opinion is we still will have a recessionary economy, whether it's official in recession or recessionary, still a not real good economy in the near future. I personally believe that the bottom will come sometime this summer.
Right.
That's kind of where I feel
Yeah.
like it will be. I
Yeah.
think that's the odds on
Because they
chance.
have to, by mandate, continue to decrease inflation, right? Their mandate is to reduce
Right.
inflation, and we're
Their-
not quite there
Their
yet.
target is to be there. The problem is it takes it months to do, and they're wanting a little bit more immediate response,
Right.
and it's just not going to happen.
So, we tend to be longer term in our approach to investing. I mean, that's certainly, we don't want to knee-jerk react to what's going on in the economy. So, if you think out long term, maybe being the rest of this year, 2023,
Okay.
how does that play out for the investment side of things?
Well, it's kind of interesting. As we look forward, I think one of the things, some people don't think cash is an investment vehicle, but it truly is a category that I
Sure.
think if somebody has a little extra cash on hand right now, I don't think it's a bad thing.
Can actually get rewarded.
You get rewarded
being-
for that.
Yeah.
If you still see continued pullbacks and things, at the very least, you sleep better at night if it's volatile. So I think those are positive things. I do expect by the end of the year, we're going to see more positive market movement. We've had a really good move. We're doing this report a little later than normal
Right.
in the month.
Yeah.
But we had a really good market move in the last few days.
Right.
So I do think that by the time we get to the end of the year, we'll be a little higher than where we are
Right.
today. Short of any black swan events,
Right.
something
Right.
unforeseen. But I do feel pretty good about that. But I do feel like that in the meantime, we're setting up for a very slow growth economy.
Right.
Not really what we saw a few years ago, more
Right.
like what we saw, during the Obama administration, I would see.
So, would you rather be early to the dance, late to the dance, or just split the difference?
Well, I just want to go to the dance.
I like it.
I think it's kind of interesting right now as we
Yeah.
look. One of the things is where do we go right now?
Yeah, where do you go
Yeah,
next?
where do you go now? Typically, coming out of a recessionary environment, there's the small and mid cap things tend to perform a little bit
Right.
better. They're more nimble and can make moves to react to the environment. And because of where international has been, and the dollar is starting to weaken a little bit, depending on which day you look at. But I think the general consensus is the dollar is going to weaken some. I would expect the international to be a much better place. It has been for the last
Right.
6 months. I think it will be going forward. So those are some areas I think we
Right.
need to look at, where in the robust markets we had a few years ago, it was all about U.S. large cap
Right,
growth
US
stocks.
large.
And I really don't think that's where we are.
What about emerging markets? Emerging markets got beat up pretty good during that growth run. Where does that look going forward?
Well, usually in the early part of recovery, manufacturing starts to pick up. That bodes well for the emerging markets because they're very tied to the natural resources. And as we see those things increase, it will increase their productivity. And they also, as the dollar weakens, is probably a bigger factor because if their economy is growing and the dollar is weakening, their value goes up
Right,
exponentially.
yeah.
So I think the potential where it's set up really to have maybe a good run in emerging markets. Wouldn't put all my dollars over there, but because it is volatile. But I think
Sure.
it certainly is an area to be aware of and to look for opportunities to
Right.
invest in.
Right. Well, that's fantastic. Obviously, still lots to work out within the economy and the market, which we talk about often, the difference between the two.
Yeah.
But generally speaking, it's maybe pointing in the right direction, and we can see some opportunities down the road.
Yeah, I think the economy is still pointing in the negative direction, but I think we're at the point where we're starting to see maybe some possible inflection points, and that is the time you want to kind of be in the market before the inflection points happen.
Fantastic.
So we're not far away.
Well, that wraps it up for February. As always, thanks for tuning in, and make sure to reach out to your advisor and connect with them if you have any questions or want more information. And we look forward to seeing you next month in March.
We'll look forward to it, and baseball season will be right around the corner.